Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Okay, we're gonna keep going here in our mini series on stocks that are actually near 52-week or all-time highs. This is the smattering. I'm Jason Hall. We got a couple more we're going to talk about right now. Tyler Crow's with me. Hey, Tyler.
How's it going? Jason, I'm going to take your host role again. And this time we're going to talk about retail. There's a lot of stories out there right now of struggling retailers. I mean, Bed Bath & Beyond has kind of made a lot of headlines lately. And, you know, the underlying thing of brick and mortar retail has not been the best story lately. You know, e-commerce coming in, the consumers being a little bit tight on the budget. But you pointed out to me two retailers right now that are both at 52-week highs, and one of them is at or near their all-time high. And that is TJX companies and ROST stores. Kind of similar businesses. But Jason, explain to me and everyone else what these two are doing as to why they're at all-time highs and why they're navigating this challenging retail environment so much better.
First of all, Tyler, I think this is really important to the story, and maybe the most important thing I hope people watching take away is that both TJX and ROST companies have really long histories of being market-beating stocks. They have created a lot of wealth for long-term investors, right? So that's why we're talking about them right now, is because I believe that story is going to continue. The reason why that's the case is because these are two discount retailers, as we know. If you've ever been inside of a TJ Maxx or a Home Goods, which are both part of TJX companies, or you've been in a ROST store, you know they have these racks of discounted clothing, home goods, apparel, other merchandise that you can get at like a real clear bargain price. It's not this perceived but not really significant discount that you might get at like the factory outlet brands that are essentially retail prices. And the way these companies do that is because they have a long history of being really good buyers. Okay. So if you have a retail, so here's a good example. So I'm not saying that ROST or TJX necessarily bought the inventory, but the big story for Target and for Walmart in the second half of 2022 was this massive excess of apparel that they had to heavily discount because they bought way too much of the wrong stuff trying to get some inventory inside their stores. TJX and ROST have a long history of being the buyer for those sorts of things for retailers, resellers, manufacturers that have lots of excess inventory they need to move out of quickly. Those companies have been really good at buying it, getting it into their markets and their stores where there's going to be demand for the product, and then turning it really fast. Wash, rinse, and repeat. They've done it for absolute decades. Now, Tyler, here's the thing. If we look at the pandemic, the early and early post-pandemic period, massive supply chain crush, China being locked down, a major supplier for so many of those sorts of goods, a lot of other parts of Southeast Asia, manufacturing ground to a halt. The bottom line is that ROST and TJX went for like a year where they just couldn't find stuff to put on their shelves because everybody they wanted to get their hands on everything they could to sell it just to fill their shelves. Fast forward to now, again, the companies have gone back to what they're good at and demonstrated their ability to buy really well, merchandise the products in their stores, and then turn that inventory. As we've seen through, and again, we're kind of Home Depot and Lowe'sing these two companies, right? We're kind of bundling them together as one entity, and they're not. They're separate companies, and they have their own advantages and their own challenges. But by and large, they've executed the same in very similar ways. They have really similar strategies. And one thing that tends to prove out is during weak economic periods, they're not resistant to recession. There's no such thing as that when your primary business is apparel, but they do tend to be far more resilient. People love a discount, right? And the other part of that, Tyler, is that we talked about e-commerce earlier in the episode here. Discount shopping also tends to be far more resistant to e-commerce. People like to find the deals. They like to go through the racks and they like to find that hidden deal that's their size. I'm going to be honest with you, dude. I love me going to some ROST and finding a new shirt for like $7. I love that.
You can't really scavenger hunt online as much as you can scavenger hunting a TJ Maxx or a ROST stores or anything like that.
Yeah, it's completely different. So as we've seen, like the factory outlets and the discounters like this do tend to be far more resilient. And the reality is when money is tight, you're far more likely to go into these sorts of stores to buy the discounted item if you can. And I think all of the things about its past history that management has proven their ability to execute, the business model and the economic returns they've generated, Tyler, I fully anticipate that that's going to continue going forward.